Welcome back, investors. Jake here. In this video, let's do a portfolio update and talk about, has the market bottomed or potentially are we going lower? When we check in with the markets, currently all of the indexes are red. Partly this is because it's the third Friday of the month and the market always just seems to pull back in anticipation of monthly options contracts expiring. Beyond that, guys, it's the Russian-Ukraine tensions. Dow falls 250 points Friday, heads for second straight losing week because of these Russia-Ukraine tensions. Now, if we can get through this weekend, we might be good. The Olympics are set to end on Sunday, February 20th. I think if Russia doesn't invade Ukraine by then potentially they'll call off the invasion. But all week, Western media and Western intelligence has been warning that when this starts, it will start with a false flag attack. Russia has to give some kind of propaganda reason why they're invading Ukraine. And sure enough, today or yesterday, there was a shelling that occurred on the eastern border of Ukraine. Boris Johnson states here, Ukraine kindergarten shelling is a false flag operation. Now, of course, people in the comments will say you can't trust Western media, they're full of lies. Okay, let's go to RT News. This is Russia Today. This is Russian paid-for propaganda, and they're talking about it. They're talking about explosions hitting the capital of the breakaway Ukrainian region. Obviously, there are ethnic Russians and Russian speakers who live here. So what a coincidence. Russia has 150,000 troops on the border ready to rush in and protect these people, save these people from that evil government in Kiev who's, mercilessly killing these innocent civilians. So I don't know if this is good enough justification. Russia is playing it up. Also, just think through this logically. If the Ukrainian government did want to attack this militants in this breakaway region, don't you think they would wait until after Russia called off their 150,000 troop invasion force currently on the border? So will this escalate? Will there be a larger false flag attack to justify the invasion? I'll keep checking RT News because they're going to tell me exactly what Russia wants the world to think. All right, so when we check in with the markets, it currently is selling off. We are almost down 10% from the all-time highs. Looks like the S&P peaked on January 3rd. And this is very significant, guys. The next couple trading days will be very telling because all the technical traders are looking at this. Is this line of support for the market at about 4,300 for the S&P going to hold? It's been holding going back all the way to July of last year. So if we break this, the market's going down to probably here, probably about 4,000 for the S&P. That would get us closer to a 20% drop from the all-time high. Or is this going to provide supports and then buyers are going to step back in and then we're just going to trade sideways in this range of consolidation, probably the rest of the year between the S&P being 4,300 and 4,800. Now, if you're in the small caps or you've been buying IPOs and SPACs, I'm sorry, but there's no help coming for you. There's been a lot of stocks that were favorites in 2020 and 2021, like DraftKings, which are selling off huge. At some point, guys, the valuation has to matter. You have to look at price to earnings, price to sales. Do they have free cash flow? Are they diluting their shareholders by continuously issuing new stock? So DraftKings is down huge. It's a technical nightmare being below all four of these major moving averages. The stock isn't going to recover for potentially years. Same thing with Roku. This is one of Cathie Wood's favorite. Holy cow. This is down 26% just today. From its all-time high, it's probably down 80%. I don't understand how the world of streaming boxes can change just because the pandemic is over, guys. So you have to admit that the valuation of this stock when it was at $4.50 was unreasonable if it's capable within 6 months of getting down to $100 per share. Then finally, we have a finance YouTuber favorite in Palantir. A year ago, all these other channels were just telling you, put all your money in Palantir. It's a one and done, guarantee 10x stock on your money over the next 5 years. And Palantir is down 7% today. It's going to get under $10 a share. When you look at their ratios, it's still overvalued. So why were all these finance YouTubers pumping Palantir in January of last year, so about 13 months ago? And they were pumping it because it had already gone up 247%. This is when all the finance YouTubers were talking about Palantir. And now that it's fallen almost 70%, well, if you liked the company and you still think their prospects are good, you're now getting it at a 70% discount. This should be the time that people should be making videos telling you to buy Palantir, but finance YouTubers aren't going to do that. So let's now check in with my Schwab account. And once again, guys, I am 100% transparent with this account. If I make money, I will show you. If I lose money, I will show you. And year to date, I am down 18% or about $11,000. However, I have been taking steps to basically ice or freeze this account a little bit. That's what I want to talk about in this video. So if you've been following all my trades with this account, you know that I sold calls against my long calls for Apple, Berkshire, and Texas Instruments because I thought that there would be a pullback in these stocks temporarily because of this week, because of the Russia-Ukraine tension and the fact that it's the third Friday of the month. And my plan, to a certain extent, is working. Obviously, when the share price of Apple pulls back, my long calls are also losing value. But I'm not losing that much because of the calls I sold. So you can see that the calls that I sold on Apple are up 16% or about $1,000. The calls that I sold against Berkshire Hathaway are up 8% or about $759, and the calls that I sold against Texas Instruments are up 16% or about $521. However, like I said, my long calls are losing me as much as my short calls are gaining me, so my account value isn't really going anywhere. I'm basically just running in place. But that's okay. That's okay because I'm watching the technicals of these positions, waiting for the stochastics to turn. That shows that there's now momentum in the buyer's favor. It's at that point that I will buy back to close these short positions and let my long calls gain back their value. Ideally, that's the strategy, guys. So right now, I only have 5 positions. Let's just go through them real quick. And then I'm sitting on $31,000 in cash, waiting for the market to show that the sellers have exhausted themselves and it's a good time to buy. Let's just go through each one of these. The first one being HCI. They are going to give their earnings report first week in March, and hopefully it's good news on TipTap's revenue growth. Otherwise, the stock can definitely go lower. The technicals are a nightmare right now. It is selling off hard. It's below all 4 of its major moving averages. I don't see HCI recovering, guys, until it can get back above its 200-day moving average. So the share price is currently at 62. The 200-day moving average is at 98. This has got to come down a long way before it starts uptrending again nicely, but I basically feel like I've committed to this position. I'm currently down 50%, so I bought in when the share price was 125. It's currently 61. Can this go below 60? And yes, it can. Yes, it can, guys. That's why I haven't added to this position or doubled up yet. We got to get through this earnings call first week in March, get more information about how TipTap has been doing. There is explosive upside as they are expanding nationwide and they'll have tremendous revenue growth that will reflect in HCI's share price. So let's just hold this position for another 2 or 3 weeks, and then we'll come back to it. Next position is Apple, and once again, I think this is just kind of trading sideways or range bound between 160 and 180. Currently, the technicals show that it's selling off, but where do you think buyers will step in and give this stock support? Most likely at around the 160 mark. So if Apple can pull back to 160, I will buy to close my short position, and then hopefully Apple will just bounce back up to 180 and potentially all-time new highs. Next up is Berkshire Hathaway, and this temporarily is selling off. You can see the stochastics here. It's clearly downtrending. However, I think there's a strong level of support. Berkshire is going to give their quarterly earnings report as well the first week in March. I think it's going to be a knockout quarter for them. All the positions that they're holding in their portfolio are up. Apple is up, Coca-Cola is up, Bank of America is up. So, I mean, unless there's an absolute disaster with Dairy Queen and Geico, the companies that they own outright, Berkshire should see a bounce from its quarterly earnings report. So once these technicals turn, once again, I will buy to close my short positions in Berkshire and then let my long calls keep going, hopefully to all-time new highs. Additionally, there's this fun story that Berkshire Hathaway bought $1 billion worth of Activision shares basically at the bottom. So Activision Blizzard had been selling off for almost a year, mostly on just bad reports of sexual harassment issues, like problems with management at the company. And it had been stuck in a downtrend for a long time, even though the fundamentals of this company were amazing. So for the last 2 years, Warren Buffett's bought almost nothing. But all of these green candles you see here in December is Warren Buffett buying $1 billion worth of Activision Blizzard when it was in the 50s. And then, obviously, Microsoft announced that they were buying out Activision. I don't know what the price tag is, maybe $90, but the stock jumped 30 or 40% in a day on news that Microsoft was buying Activision Blizzard. So Warren Buffett just made a ton of money, on a very short-term play. Wasn't his plan. I'm sure he would have been happy holding Activision long-term anyways, even if Microsoft didn't step in and buy it. Next up is Facebook, guys, and this is just an absolute nightmare. Their stock chart is not looking any better than it did when it collapsed 2 weeks ago. When we look at the stochastics, it's still in the oversold range. It's just dead. It's just flat. There is no buyer interest in this stock. So it's drifting down, currently at 2.7. I feel like $200 a share is a psychological barrier where a lot of buyers will step in, but I'm not trying to trade this or touch this or do anything with this stock until these technicals show that there's momentum in the buyer's favor, even in the short term. So I'm just going to continue to check this every day and see if any technical indicators at all say that Facebook can get some buyer support. Finally, the last position in my account is Texas Instruments, and I guess this was downgraded by a couple banks for some reason, and that's enough to drive a sell-off in the short term. When we look at their technicals, though, this is really interesting because I drew a level of support where I said if it sells off, this is where it's going to go. And sure enough, this level of support here at 162, going all the way back to November of 2020, it held on the day that it really sold off hard. So we have to ask ourselves, is this downtrend going to continue? Is it going to create a new lower low potentially in 2 or 3 weeks? Or has it found support at 162 and it's going to enter this range of consolidation for a while? What are we looking for? Once again, I'm looking for the technicals to start trending up, showing there's a little bit of momentum in the buyer's favor. But I think the 4 moving averages now are a huge impediment from Texas Instruments getting back to all-time highs or getting back to 200. With all 4 of these major moving averages now lined up above the current share price, I think this stock is going to be range bound for a while. I don't think it'll sell off by a huge amount because it's still a really good profitable company that pays a nice dividend. But is this going to break out to all-time new highs anytime soon? Definitely not. Finally, once again, I'm holding all this cash. I really, really, really want to open a debit spread and get into a position in Google, but I'm checking these technicals every day, guys, and they're telling me that Google's going lower. There's huge selling pressure on the stock right now. For whatever reason, they had a fantastic quarter. They gave really good guidance. I think next quarter is going to be amazing as well. But as long as these technicals tell me it's going lower, then I'm going to wait to buy. So we'll keep checking it when the markets open next week, and hopefully I can finally get into a nice position in Google. I think this level at 2,500 for sure will hold, but I have no clue why this isn't holding or uptrending nicely, considering how profitable and once again their guidance for the future was great. So what do I see the market doing in the short term? And honestly, I think the market is going to continue being pretty rocky the next month. Obviously, we got to get through this weekend and make sure that Russia does not invade Ukraine. But in March, we have the Fed meeting on March 15th, 16th, and they are going to announce their first interest rate hike. On the macro scale, how damaging is that going to be to the economy? I don't think very much. I think unemployment is low, earnings are high, corporate profits for large S&P 500s is still good. So this won't do much economic damage to justify a market sell-off, but shorters and short-term traders, they're just going to take advantage of the news in order to create a lot of volatility. So we got the third Friday in March happening on the 18th, and then we've got the Fed meeting the 15th and 16th. So when do you think the market might pull back the hardest or potentially bottom in the short term? And it's going to be this week, guys. It's going to be the week of March 13th through the 19th. But once we get past that first interest rate hike, once we get back past the third Friday of the month, I think going past that into March and April, the market will start smoothing out, and some of these stocks will eventually find their bottom. Okay, guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.